Hello and welcome. You're watching the F&O Show on BloombergQuint and I'm Navneet Dsouza.
Hi everyone, I'm Agam Vakil and here are the top headlines for this hour. Well, the Nifty trades with a negative bias in a volatile trading session, and open interest in Torrent Pharma and NBCC surges as traders take fresh long positions in their respective stock futures. And Matrimony.com lists flat at $9.85 per share. Dishman Carbogen relists at its earlier price of $3.50. And Dr. Reddy's is the top gainer on the Nifty after Morgan Stanley upgrades the stock to overweight. And the Indian currency weakens to an 11-week low after the US Federal Reserve says it's sticking to its October plan to trim its balance sheet.
All right, let's take a look at the markets as we speak. Well, the markets have succumbed to some kind of selling pressure. The Nifty currently trading is it's trading below that mark of 10,100, and as you can see on your screen, the Nifty futures for the September series has come down to 18 points as compared to 21, which was seen in yesterday's trading session, indicating there are some fresh short positions which are being taken in today's session. And mind you, the Bank Nifty will be in focus today as the weekly options expiry is eyed today. And if you look at the range for Nifty for the September series, next Thursday is the expiry. We are looking at that range of about 10,000 to about 10,200 on the upside. And as we speak, we've seen some open interest being built up on the Nifty call side for strikes 10,100, 10,200, and also out of the money option strikes have been in focus. The 10,300 call strike is also witnessing some sort of open interest addition. On the put side, so far, major writing has been seen for the 10,000 strike. And talking about Bank Nifty, Agam, the expiry today seems like, if you look at the maximum open interest concentration, is at the 24,800 on the downside to about 25,200 on the upside. So that's the range we're looking for the Bank Nifty weekly options expiry.
Right. I also want to talk about some of the big movers in terms of open interest and the change. Let's pull a list of all the stocks which are looking at a substantial increase in open interest. And there you have it. Of course, Yes Bank is going through a corporate action. That's the reason why you're looking at a 410% increase. But Torrent Pharma, Divi's Laboratories, and Strides Shasun, all belonging to the pharmaceutical space. In terms of some other stocks which are looking at unwinding, we have the likes of Andhra Bank, Bank of India, India Cement, and Syndicate Bank. So that's where the PSU banking stocks stand out. But I want to bring focus to two counters specifically. The first one is NBCC. And in case of NBCC, it's one construction order of around 3,200 crores from the government. We're looking at a steady increase in open interest, not just today, which has moved up by as much as 10%, but also over the last 5 sessions. And the other stock, of course, is Torrent Pharma, as I was alluding to earlier. We have seen a surge in open interest, up as much as 14%. And once again, it has been a very volatile over the last 3 to 4 trading days. And we are looking at a further increase as far as open interest goes, Navneet.
Well, clearly, the volatility today is on the higher side as India VIX has surged to those levels of which was inching very closer to the 12 mark. In fact, it has surpassed that and is trading with gains of almost 3.5%. And the market breadth has also turned negative. It is almost 1:2 in favor of the declines. But let's move on and talk about Dishman Pharma, a stock which is in focus today as the company has relisted today. In fact, if you look at the stock, Darshan, let me bring you in this conversation. I know this was a company which was listed earlier, and the last day when it was traded was on the 29th of May. Tell us what kind of valuations, are there any changes? Because the reverse merger took place in order to save some taxes, I believe.
Yeah, I believe, yes, that was the entire thing. They had this subsidiary called Carbogen, which is a Swiss company. So that they did was a reverse merger into the company so that, their net worth would increase, as well as, they will be able to take benefit of taxes to the tune of 300 crores. So it's listed. So last time it was 300 crores. So it's a decent premium. Last time it was 301. It's listed at almost 350 crores, 350 rupees. HDFC Securities has a target on it of almost 405. So that's something that we need to watch out for. We'll try to get in the pharma analyst to give us more details on what he sees as far as this stock is concerned.
All right, so we've got a pharma analyst, Darshan. We've got Amey Chalke, who's a pharma analyst at HDFC Securities, who's joining us now on the phone line. Hi, Amey. Good morning to you, and thanks very much for joining us today on BloombergQuint. First up, just want to get your take on the relisting of Dishman Pharma. What kind of the target you are looking at for this counter?
So we have already released our initiation report just a few days back, and our target is around 405 rupees, which is on the September 19 EPS basically.
Do you think that valuations are high for Dishman because it will be over close to 25 times if you take it on the price that is listed, almost 350 compared to someone of the larger companies which are trading at much cheaper valuations?
I guess in case of Dishman, we also need to look at from EV/EBITDA perspective because there is high amortization cost involved on the back of this reverse merger. So if you adjust for, so because of this, I guess EV/EBITDA would be the right evaluation metrics basically for this company. And if you see it from that angle, then it will be trading around 10 times on FY19, which is at par or much below than the peers basically.
Did it make sense for the company to do this reverse merger?
So I guess they have done it to revalue their assets in the carbon analysis Switzerland, which was the main source of their business at this point of time. So I guess, and there is also 300 crore kind of a tax benefit which they would get from this reverse merger.
And finally, I don't know whether you've seen it, but news just coming in terms of Dr. Reddy's, the counter is up 7% because the company has said that they have received EIR for the Srikakulam SEZ Unit 2. Just wanted your clarification. Is this the one that has the warning letter or is this a different unit?
I think this is a different unit. I guess this is formulation unit, and the warning letter which is there is on API unit.
Okay. Thanks so much, Amay, for telling us what you believe as far as Dishman is concerned and also clarifying on Dr. Reddy. So the price 7%, I think the market was anticipating that the Srikakulam API, which is the affected plant, would have gotten the EIR, but it's not. It's another counter. But Dr. Reddy's, we should pull that stock up. It's up almost 7%.
That's
I think.
a star counter once again after yesterday's surge of 3.5%. Darshan. After
a lot of news coming in, even the Morgan Stanley upgrade that came in. So everything's working for Dr. Reddy's. Everything's working for DV's.
I think people were talking about that the valuations of Dr. Reddy's were pretty much at the lower side, and now that you've got some positive news coming about.
So Sun and Dr. Reddy's pretty much among the cheapest at this point of time.
Right.
All right, Darshan, thanks a lot for joining us and giving us an update on the pharma space. Agam?
Right, so it's time to bring in our experts as far as the futures and options space go. We are in conversation with Hemant Thukral, the head of derivatives desk at Aditya Birla Money, and Ashish Chaturmota, the head of technicals and derivatives at Sanctum Wealth Management, who are joining us on the show. Thanks, guys, for joining us. Hemant, I'm going to come to you first. Your direction of the Nifty futures and the way you expect it to pan out over the next couple of days, especially given the fact that we are heading into expiry.
See, basically, good morning. The way I see this market day to day, I think 10,200 call writers were clearly telling that there's some pressure can be felt at the upside. But I think it's a good sign for the people who have missed the rally. I really feel that 10,099.80 levels will hold, and those are the most important levels for the bulls. So any opportunity around 10,050, 10,080 levels should be utilized as a buying opportunity because that gives the risk reward in your favor. And I think we should keep a stop loss of 9980. I really feel that markets will settle down, and before expiry we may retest again 10,150, 10,180 zones.
All right, so Hemant feels that this is just a knee-jerk reaction, or probably it could be on back of the Bank Nifty weekly options expiry today. But Ashish, coming to you, I'm just looking at the 25,000 call strike of Bank Nifty. That's added a lot of open interest, so it looks like call riding to me. Do you think today's expiry will happen below that level of 25,000?
Hi, morning. So yes, chances looks quite bright, because see, 25,000 put we saw a very significant base, and since we have broken this 25,000 mark, a lot of put writers are now stuck in the positions, and that is leading to now a lot of call writing happening at 25,000, and even a slightly, slightly out of the money 24,800 kind of put. So that gives me a sense that definitely if you look at today's expiry, 24,900 24,950 looks very difficult to cross. On downside, however, I think 24,750, 24,700 should act as an important support. So broadly speaking, 24,850, 24,900 should be logically where we think Bank Nifty should expire today.
Right, so then we're going to come down to the options corner, and this is where we focus on exclusive strategies based on options on the benchmark indices. And Ashish, I'm going to come to you on this one. You are initiating a long on the 10,150 call at current levels.
Yep. So see, if you look at today we have seen a sharp downtake in the market, and that should be read with Bank Nifty expiry today. But I think if you look at the data very clearly, around 9,900 and 10,000 we have seen the most significant put writing happening, and around 10,200 to 10,300 we are seeing a lot of call writing. So that gives me a sense that 10,000 should act as a very, very important support, at least till expiry. And if you look at the put call ratio, it is trading at 1.57, which is again a very comfortable zone. So I'll not say that it's
but don't
extreme.
you think it's on the higher side?
So I think logically, if it crosses 1.75, that's it becomes a very then it becomes a very heated market.
Right.
But at 1.50, 1.60, I think it's still a reasonable level. And look at the position build up. We are not seeing a very sharp uptick in the positions build up. So markets were consolidating and the positions were little on the lighter side. So maybe we have seen a downtick, but around 10,000 again we might see a strong buying interest coming back, and we have enough days. If we see a recovery for next 3-4 trading sessions, then I think logically it makes sense to initiate a long position in 10,150.
When the Nifty reaches those levels. Actually, it's right, because if you look at the maximum open interest concentration so far on the put side is at the 10,000 strike. But let me also get Hemant into this conversation and get his option strategy for the day. Hemant, any option strategy in Nifty or Bank Nifty?
See, as I suggested that at the down levels, one should definitely enter Nifty. Bank Nifty also I would like to highlight that I feel that it's actually come down to strong support zones. Yes, it is a weekly expiry. That is why we are seeing that selling pressure. But overall, I feel that in the next weekly expiry, we should buy 24,800 call, because I feel that today, after today's expiry goes away, 24,700 should hold, and we should again start rebounding back towards 24,950. So 24,800 call for next is available roughly around 167, 170 rupees. So I think one can keep a stop loss of basically on Bank Nifty of 24,650 and a target back of 24,950, and you can run this run up through buying a call. So 24,800 of next series is advised to buy.
All right, so Hemant is suggesting to buy 24,800 call strike of Bank Nifty for the next series. But on that note, let's also address a couple of your stock futures which are buzzing in today's session. And goes without saying, once again, it is the pharma counters from the likes of Dr. Reddy's Laboratories as well as Divi's Laboratories. Both are the top F&O gainers for the day. Ashish, I'm just going to ask you to pick one stock. If somebody had to take a long position at current levels, which one would that be? Dr. Reddy's or Divi's?
I think Dr. Reddy. See, if you look at today's data, significant volume, significant open interest addition, and if you look at price up move, we have already seen a very sharp uptick in Divi's Labs. So I think the next turn comes in for Dr. Reddy's, where we might see levels around 25.50, 60, which is almost 120, 130 rupees up from the current levels. And on downside now, I think 23.80 should be kept as a trading stop loss for initiating a long in
Can I
Dr.
throw
Reddy's.
one more pharma counter there? Even Lupin is doing well today.
So Lupin, yes, I think, in fact, if you look at in terms of risk reward, Lupin makes a better sense.
Right.
So I didn't check that, but yes. But if you look at in terms of open interest addition, it is a nominal 1.52% addition. So in terms of OI addition, we are seeing a significant addition in Dr. Reddy's. But if you look at in terms of risk reward, Lupin makes a sense, because on downside, stock has formed a good base, and now 1,010, 1,008 should act as a very important support. Keeping that in mind, I think on upside 1,060 should be the immediate target for Lupin as well.
Right, so I'm actually struggling to find a non-pharma stock which is buzzing in trade today. But I have seen some weakness in Tata Motors, and if we can pull that plate up as well when it comes to its change in open interest, there is some weakness seeping in. It's also one of the biggest losers on the index. Its open interest has surged as much as 4%. Hemant, any call on this counter? How do you view Tata Motors over the next few sessions?
See, again, I will put it this way. It was a stock which was performing. and we are seeing some fresh shorts built up because again stock has slipped below 415, 414. So in immediate short term, you may see it retesting 398, 400 zones. But I think that will be the real test for Tata Motors because it has formed now a base at 400. If it manages to hold, positionally it is good for Tata Motors. It can rebound back to 420. But for immediate short term, I see it slipping to 400, 398 levels by say tomorrow or maybe by Monday.
Well, Coal India is the other counter, which is trading weak in today's session. Let's just pull up the futures of Coal India and see what they're doing currently. Okay, not much of change in terms of open interest, Ashish, but yet would you suggest initiating any shorts here? One should stay away.
Yeah, so if you look at open interest is flat and prices are correcting, so I think here both we are seeing long liquidation as well as short build-up, and that's the reason you are seeing us a flat change in the open interest. But definitely if you look at charts, we have broken a very crucial support below 252, and since it has broken those levels, I think now keeping in mind that 254 should be kept as a stop loss for initiating a short. I think on downside 240, 238 becomes a logical target for coal in next 2 to 3 trading sessions.
Okay, so Coal India are looking weak there, but time to move on and address the queries of our viewers. And we also have people who have been calling us. The first caller is Akhil Patel, who is calling us from Mumbai. Hi Akhil, thanks for joining us. Tell us, what is your query?
Hi, thank you for having me on the show. I currently hold 1,000 shares of Motherson Sumi in cash, and since I'm expecting some weakness in the near term, I actually wanted to know how do I use the F&O space to hedge against the downside that I'm expecting.
Well, Ashish, I'm going to come to you on this one. Motherson Sumi has 1,000 shares. How does he hedge against the downside?
So I think since he is holding 1,000 shares, whereas the lot size is around 2,000 shares.
Right.
So it makes difficult for him to hedge exactly his positions, because otherwise I would have recommended him going long in a 340 put option. So that would have made sense. But since he's holding just 1,000 shares, it becomes difficult. But still, if he wants to hedge it, I think logically 340 put option should be bought in for this expiry. However, if you look at the technical structure of the chart, I think stock is in a very strong uptrend. There can be a dip towards 325, 324 levels, but around those levels, we might see a strong base being built up in the stock. Broadly, this stock is in a very strong uptrend. We might see stock crossing 355, 360 in next couple of weeks from current levels.
So he should hold on to his
He
position.
should hold on to his positions.
All right, so that's the view coming in on Motherson Sumi. But let's move on to our next caller of the day, and that is Manpreet Kaur, who's calling us from New Delhi. Hi, Manpreet, tell us what's your query on.
So I bought one lot of South Indian Bank September futures yesterday at 29 rupees, 29.5 rupees. Should I hold this position till expiry?
Manpreet, you're making a lot of money. Agam, you want to guess what's the lot size of South Indian Bank? It's 33,141.
Yes.
And the stock actually surged yesterday 7%. Some profit booking has been seen. Ashish, what would you recommend? Should she book profits here?
I think she should continue holding on to the position, because we have seen a very significant, open interest addition, and the prices have moved up. Stock is trading at an all-time high. I'll suggest a trailing stop loss of 29.90 and continue holding on to the position. Broadly, I think 33.50 should be the logical target for South Indian Bank before this expiry.
There you have it. That's the view on South Indian Bank. But our viewers have also written to us on social media. And the first query comes from Vijay Arun, who writes to us from Bengaluru. And he is short on the Bajaj Auto futures at 3,036. And he wants to know what price can he book his position in. Hemant, if I can come to you on this one. Vijay Arun is short on Bajaj Auto. What must he do? Should he hold on to his position?
See, I would say that my would be two recommendations. One, the market is seeing profit taking, so it might slip more. But in any case, I don't see Bajaj Auto going below 3050. So he might get an opportunity to exit at a very low loss, and I would definitely want him to cover at 3050. For currently, he can just revise the stop loss for this short position to 3110. If the stock goes above 3110, he should definitely come out of the short position. It's one of the stronger stocks. Or the other way around is he can buy a 3100 call and stop his loss at least today, so that he can hold on to these short positions.
All right, Vijay, we hope that you're watching our show. Heyman recommends on your position that you should put a stop loss at about 3110 on Bajaj Auto position that you've taken, and probably you could get those levels of 3050, and that's when you can look to exit from your Bajaj Auto position where you've shorted one lot of September futures. For the time being, Bajaj Auto is just about marginally trading in the green in today's trading session. But let's move on and address the next query, which comes from Vikram Kapoor from New Delhi, who has bought one lot of Dr. Reddy's September futures at a price of 2290. He wants to know if it is the right time to book profits or he should hold on to his position on Dr. Reddy's. Ashish, should he book profits because the stock has moved a lot from the buy price?
So if he's happy to book profits, then it's a different question. But if it's about riding the trend, then I think it makes sense to ride this trend. Stock looks very promising, as we discussed, almost 5.5% open interest additions, good amount of uptake, a good amount of breakout above this 2400 mark. So I think keeping that in mind, I think on upside 2520, 2530 becomes a logical target on upside. I will suggest a trailing stop loss of 2390 and continue holding on to the position.
Is it advisable, Ashish, if the targets you're talking about on the charts, they're not met on the expiry day on Thursday, should one also roll over the position?
One should roll over. One should see whether trailing stop losses are hit. If it's not hit, then continue riding the trend. So that's 2390. If 2390 is not hit on expiry, just roll over your position to the next series.
Okay, so you can also roll over your position to the next series. But before we wrap the show, let's also take a look at what are the other trading strategies that our experts have for our viewers. Ashish, I'm going to come to you. You do have a few calls on stocks. What are they?
See, two stocks which are coming to our mind. One is in the FMCG space, Dabur looks very, very interesting. In last 7-8 trading sessions, we have seen a significant uptick in the delivery volumes. In terms of open interest addition, almost 12% rise has been seen. And if you look at last 3 series, we are seeing continuously high rollovers in the stock. So keeping that in mind, I think Dabur is one stock which is ready for crossing its all-time high and hitting a level of around 335, 340 on upside. Keeping that in mind, I think one should initiate a long position in Dabur, keep a stop below 305, and upside can look for a target of 335, 340, maybe not this series, but obviously next series. So I think within next 15 to 20 trading sessions, we expect almost 7 to 8% upside in Dabur from current levels. My other pick would be a long idea on Federal Bank. Again, stock is trading near its all-time high with a very strong delivery volumes picking up. So I think one can initiate a long in Federal Bank, keeping a stop below 115, and on upside can look for a target of 128 to 130 levels.
All right, so those are two strategies from Ashish on Dabur as well as Federal Bank, and both are long calls from him. But let's also get you some strategies from Heyman. Heyman, over to you. What are the trading strategies that you would like to share with our viewers today?
I would like them to go long on Karnataka Bank. One, the stock has added a big open interest yesterday. A big jump in delivery volumes we have seen, 79 lakh shares traded on the cash side. So, and if you see its 20 days average of trading is just 10 lakhs. Yes, the stock has come down today in profit taking, but I think it's come down to the support levels. So if they can keep a stop loss of 157, which is a very risk reward will go in their favor, I feel the stock has the potential to go ahead and test 170. Dr. Reddy, I think Ashish has already spoken about. I would actually see it moving up to 2490, 2500. So that's another stock which I think within the pharma pack can outperform. And one more stock I would actually wanted to recommend, which has been discussed here, is NBCC. I think again the stock has come down from the highs today, but I think it still gives a very good trading opportunity. One can keep a stop loss of 215 and a target of 230.
All right, so that's your view on NBCC. And we have more queries coming in, actually. So let's also try and address them. We have Gaurav Singla, and he has called for a view on the Nifty Pharma and Reliance Home Finance listing tomorrow. Ashish, I know that Reliance Home Finance listing may not be something that you may be tracking, but you can at least take us through the Nifty Pharma.
So looks interesting. See, if you look at the constituents, most of the heavyweights like Lupin, Dr. Reddy's, Divi's Lab, and even Sun Pharma, they are seeing signs of bottoming out, and that gives me a sense that the entire pharma space, maybe not on a structural uptrend, but definitely in a shorter to medium term, we might see 8 to 10% upside. And if that is the view, then I think Nifty Pharma looks good for another 8 to 10% upside from current levels. So he can definitely, if he's holding a lot of these these pharma names, then he should continue riding the trend.
Well, Nifty Pharma Index is your top sectoral gainer also of the day. In fact, one of the lone gainers, if you look at all the sectoral indices, that's gained nearly close to 2%. But in the last 12 months, clearly the pharma index has outperformed. It's down about 20%. Hemant, I would just want to get your attention to India VIX. I remember last time when we were chatting, you mentioned the crucial mark of 12. And I have to say this, once that mark was breached on the downside, Nifty did hit its record high levels. But in today's session, India VIX has surged again. And once again, it is trading above the 12 mark. What is your reading on it?
See, definitely VIX has surged today, which is a sign of worry for, I think, for all the bulls. I would be watching how it closes today. If it manages to close above 12.3, 12.25, then I think we'll see one more round of correction and VIX may move till on the higher side towards 13.65, 14 levels. So we have to watch, I think, very closely today these levels. If it closes below 11.5, then I think bulls can take a sigh of relief. We may not see a further round of correction tomorrow.
Well, so 12, the mark of 12 is crucial. But moving on, matrimony.com listed absolutely flat to its issue price on the National Stock Exchange. Let's cut across to BloombergQuint's Yatin Mehta, who is in conversation with Murugeval Janakrishnan, the founder and MD of matrimony.com.
We are joined by the promoters of Bharat Matrimony. Thank you so much, sir, for joining in, and congratulations on the listing. Of course, the listing has been slight soft, but were you enthused by the kind of retail participation that we saw, and do you expect that the institutional participation also will pick up in the secondary market now?
The thing is, first of all, very happy about getting listed. So, and we are for decades to come. We are going to build a large institution. And the category we are in, matchmaking, wedding services, huge opportunity. And we are India's first consumer internet company to get listed. As you see, when keep accelerating growth, you see the EBITDA margin moving up the matchmaking and wedding services, the humongous opportunity. We'll accelerate the growth combination of matchmaking and wedding services. We are quite excited about for the beginning of the new journey. For us, it's just day one of the long-term journey ahead, actually.
Talking about two business segments that you operate. One is the matchmaking, which is driven by the online platform, and the marriage services. If you could tell us, how do you see the revenue mix changing moving forward for both of these segments? And in terms of profitability, do you think the marriage services business will pick up significantly moving forward?
The marriage services this year, it's contributing around 7% of revenue. In terms of the mix, as you progress, obviously mix will increase because marriage services are growing at a much faster pace. One other business in the wedding services space, matrimony photography, that business quarter on quarter growing at 100%. Because still in the early stage, which only in few states, we are doing around 300 plus weddings or 400 plus weddings on a monthly basis, and having an opportunity in terms of the number of marriages happening in India. Very, very small. It's insignificant at this point of time. So wedding set apart from photography, we also other services as well. So the opportunity is $55 billion, highly unorganized. So basically you look at, identify the opportunity, make it successful in one market, then expand that market opportunity across various states in India. That's what we did in photography. That's what we'll do in other services as well.
All right, that was the management of matrimony.com, a very muted listing for the company. In fact, the issue was subscribed almost 4.4 times, but it is currently trading at those levels of 938 with a cut of almost 5%. Well, clearly, the new kid on the block is not having a great day today. That's matrimony.com, a very tepid listing there for the company. In the meanwhile, just also have a look at the markets, which have been trading in the negative territory. Some sort of profit booking has kicked in today's session, and we are expecting more volatility to come by because today is the Bank Nifty weekly options expiry day for you, and the Nifty 50 is trading below that mark of 10,100. Bank Nifty is now slipped almost 1%. Actually, it's down 177 points. Well, it is trading below that 24,800 mark as well. But let's move on. There's a breaking news there flashing on your screen. The NCLAT has rejected Cyrus Mistry's plea against Tata Sons. Let's get in Payaswini Upadhyay to take us through all the details. Hi, Payaswini. Thanks very much for joining us. Tell us what are the recent updates.
Navneet, that's actually pretty much that we have that the NCLAT has rejected Cyrus Mistry's petition against Tata Sons, and it might be useful at this stage for as to give some background to our viewers, the plea related to an oppressive and mismanagement case that the Mistry side seeks to bring against Tata Sons, and at the NCLT stage and at the NCLAT stage, both the stages, the Mistry group had alleged that they hold 18% equity shareholding in Tata Sons, and they should be hence allowed to bring an oppressive and mismanagement case. Now remember, there is a 10% threshold to bring an oppressive and mismanagement case, or a case like that can be brought by 100 shareholders put together. But the NCLT rejected this petition of Cyrus Mistry that their equity shareholding is 18%. They held that both the preference shareholding and the equity shareholding should be counted to basically gauge if an oppressive or mismanagement case can be brought about. There also another test that the NCLT laid down while seeking to address the Mistry petition, and that relates to the waiver. So once an oppressive and mismanagement case is brought in, the first thing then the NCLT will see if you have the 10% case, 10% shareholding, or the threshold is met, and if that's not met, the NCLT under the rules can grant a waiver. The NCLT rejected that waiver application as well of the Mistry side, saying that they didn't make or they didn't have enough cause of action to bring the case against the Tata Sons. Now, if I can also lay out some of the grounds of oppression and mismanagement that Mistry side argued before the NCLT, and they related to oppressive articles of association, bad business decisions such as acquisitions of Chorus by Tata Steel and continuation of Nano Car project, illegal removal of Cyrus Mistry as chairman of Tata Sons board, his forced removal as director on group companies board, breach of insider trading regulation, leaks of board meeting decisions to outsiders, and abuse of position by Ratan Tata. But all these grounds that, the NCLT had held that now these allegations made by the Mistry companies qualify as an cause of action to bring an oppression and mismanagement case under Section 241 of the Companies Act. And for the petition to progress of this nature, the cause of action test must be met. So that's what pretty much we have at this stage.
It's too legal for us to comprehend this, but just want to get this straight. It is good news for Tata Sons at the moment. Any next step which the Cyrus Mistry group could take after this order?
All this while the Mistry group has held that they are likely to, contest this to the last mile, and that is essentially the Supreme Court of India after the NCLAT. So now we'll need to see exactly on what grounds the petition has been rejected, but it's safe to argue or safe to assume at this stage that the Mistry side is also likely to contest this decision, and this will also have a bearing, mind you, on the recent decision of the Tata Sons to go private, because currently they're a public entity and they want to go private. Mistry side through a letter has also contested that decision. So this order is likely to have a bearing on Mistry's legal legal game plan on that end too.
Right, we'll get you some expert opinion on this. We'll have some guests joining us in a while to take us through this recent update which has come about via NCLAT, where they have rejected Cyrus Mistry's plea with regard to mismanagement and oppression. And clearly, as Payaswini was just mentioning, just to cut the long point short here, that this is good news for the Tata Sons group, but we'll have to wait and watch what could be the next step by the Cyrus Mistry group, Agam.
All right, so I'm just going to go back and take a look at the markets which have weakened to a certain extent for now. The Nifty actually lost the 10,100 mark, and it is inching back towards the 10,000 mark. Of course, that there is substantial amount of open interest accumulation in those puts. And well, whether or not we do see that mark breach, well, it looks unlikely for now, according to our experts. But we just have to wait for more developments with respect to the kind of volumes and the open interest and the change that we see with respect to the Nifty.
Well, Agam, just highlighting the volumes today, We've been talking a lot about the Bank Nifty weekly options expiry day. The volumes, Ashish, they've already touched close to 4.5 lakh crore in the F&O space.
No, so I would like to highlight one thing very interesting here is, as you were talking about the volatility, and volatility is a key here to gauge the overall sentiment, how the markets are going to pan out. So definitely, as you were mentioning, 12 mark is a very critical point of control. If you look at, most of the people are watching volatility because it was trading at an all-time low and index was trading at an all-time high, and people were looking for any serious reversal in the volatility to get a sense that whether the market trends are changing or not. And since we are hitting this 12 mark, I think any move beyond 12 on a sustainable basis, definitely it will be a area of concern, though I have a positive bias on market. So I think two things which we have to keep in mind for holding on to long position. One is the volatility. If it crosses and closes about 12, then definitely one need to be cautious. And second, if Nifty breaks 10,000 on a closing basis, because there we have seen a significant put writing. So if both these things happen together, that will be a serious cause of concern.
Well, there you have it, guys. Watching out for the India Volatility Index on the mark of 12 and the Nifty closing below the mark of 10,000. With that, I want to thank our experts, Ashish as well as Hemant, for joining us and taking us through those calls and solving some of our viewer queries. But with that, it's a wrap on this edition of the F&O Show.
Thanks very much for watching.